Welcome to Constellations, the podcast from Kratos, where industry leaders share their thoughts and experience on the future of space business, policy, and opportunity. If you like Constellations, please support us by giving a rating and review on iTunes. And don't forget to share this podcast online to help our community grow.
Welcome to Constellations, the podcast from Kratos. My name is John Gilroy, and I'll be your moderator. Our guest today is Carissa Christensen, CEO of Bryce Tech. Software-defined networking, satellite life extension, innovative financing, all are having a huge impact on the satellite industry. And who better to explain it than Carissa Christensen, CEO and founder of Bryce Tech, a leading aerospace and emerging markets consultancy and the publisher of the annual State of the Satellite Industry Report. Carissa is an internationally recognized expert in commercial space and the interplay of government, military, and commercial activities in the aerospace sector. Carissa, your company, Bryce Tech, recently delivered its State of the Satellite Industry Report. How many have you done of those reports anyway? A whole bunch, huh?
John, what a pleasure it is to be here today, and particularly a pleasure to talk about the State of the Satellite Industry Report. The next one will be the 25th year of that report. Bryce has not produced all of them. We've produced quite a few, and very early on in the history of that report, I was fortunate enough to help develop the very first one for SIA. So that kind of 25 years of time series data is really extraordinary in the industry and very satisfying to me as an analyst.
Well, from a historian's perspective, I'd love to compare them, but that's for a different show. Maybe we'll do that down the road somehow. In this particular report, the lead, I think, involves increasing affordability and productivity, plus some new capabilities that are changing the dynamics of the satellite industry. So a lot of changes here. What are the main drivers behind these big three changes?
The drivers behind changes in the industry right now are, there are several different streams. One is the continual and continued investment in technology and incremental and even beyond incremental improvement by long-standing and well-established satellite manufacturers, satellite operators, launch providers, and ground segment companies. So historically, we've seen some drop in launch prices just because of incremental efficiencies. We've seen a very significant increase in on-orbit capacity over the last roughly 5 years because of the deployment of high-throughput satellites, which have significantly more capacity, and the cost per unit of throughput is dramatically lower than previously. So the space industry, the space ecosystem, continual investment in technology improvement, we continue to see the impact of that. Another thread that's quite interesting is sort of the nexus of a new small satellite form factor that's become more and more mature, combined with investment from venture capital firms and billionaire super angels in a variety of space companies, and for the super angels, particularly in launch capability. And those factors together have created a new stream of space activity driven by venture-funded, risk-tolerant firms seeking to change architectures and develop new capabilities.
No, I'm taking notes. I wrote down 25 years and wrote down the word incremental. And the wise man once told me that people always overestimate what they can do in a year and underestimate what they can do in 10 or 15 years. And so just small incremental changes, 1% change over 25 years, get all these drastic changes here just today and makes things very, very interesting to talk about. You mentioned financing. I guess that's the heart of it, investing in new startups. New capabilities are not limited to satellite functions. Are they? Or are new capabilities in the way financial deals and investment structures such as SPACs? So the technology is changing and the financial tools are changing too. Is that right?
Absolutely. And the space economy is now taking advantage of innovative financial tools in a way that it had not previously at the same level. And the data are very interesting. We produce another report called Startup Space that shows venture investment in space. And that's any company that's had venture or angel investment throughout its history is included in our startup space roll-up. And there was a very significant step function from almost none to a couple of $1 billion in 2015 of venture capital and super angel capital invested in space startups. And that number has grown to exceed $7 billion annually. That investment really has changed the way companies operate, and it was enabled by, among other things, those small satellites. If you're starting a company and the satellite that really the nominal satellite that you could build costs a couple $100 million and $50 million to launch or more, it's difficult to raise startup capital for a risky venture. Whereas if you can build satellites for on the order of $1 million and launch them on a rideshare or on a small launch vehicle, so your launch costs are in the single or low double-digit millions, that becomes feasible. You can raise $5 million, $10 million, $20 million to start a business venture, which is a risky business venture. Much more difficult to raise that capital for a high-risk business venture when you've got additional zeros added on. So the combination of technology and innovative financing for the space industry has really driven a surge in new companies and new types of services.
I was at your website this morning and I saw this figure. I was kind of amazed by it. Is some figure something like 40% of the small sats that have ever been launched has been launched in the last year or two or something? I mean, this is shocking, isn't it?
It is. It really is. It's an extraordinary moment in space. So if you think about the history of launches of satellites, and the vast majority of the commercial space economy centers on satellites. The commercial space economy today, it's a digital economy. It's associated with the satellite value chain, the manufacturing and launch that enable the deployment of assets, and then those assets are providing digital services. I hope we have a moment to talk about beyond the satellite economy, the sort of in-space activities, which has a different economic structure. But let's focus on the big commercial space industry, really driven by satellites. And the dynamics around those businesses, as I mentioned, have significantly changed through financing, through new technologies, and funding of startup companies with many more satellites that are much smaller. So the sequence has been kind of the introduction of small sats, the business constructs using small satellites, which started out to be focused on remote sensing systems. We had Skybox out of Stanford that was acquired by Google and then sold to Planet. We have Spire, and any number of companies. And those are satellite systems that are focused on imagery, and the satellite constellation size is on the order of 100, say 50 to 100 satellites. Those companies raised money, they developed satellites successfully, they began to deploy. And then we saw the emergence of telecom satellite, small sat concepts. Those constellations are number in the thousands in terms of number of satellites. And they are at an earlier phase. They're just starting to deploy, whereas a number of remote sensing companies are fully deployed. They have had to they require more capital because the constellations are so much larger, and they've had some really fascinating effects. If you're launching dozens or even hundreds of small satellites, it doesn't have a huge effect on the launch rate because those small satellites, a lot of them can fit in a large vehicle. When you're launching thousands, it does start to affect the launch rate in a noticeable way. And the statistic you highlighted, significant proportion of historical satellites just in last year, is largely because SpaceX deployed 1,000 satellites last year, and they've deployed 1,000 satellites this year, and will deploy more large groupings on Falcon 9 associated with SpaceX's large telecom constellation of small sat Starlink.
Carissa, when you mentioned the commercial space industry, if you look at this historically, last 25 years, we benefited really from historical low interest rates. And so this whole idea of low interest rates, is this a new norm or just a real calm before we get hit, before the storm actually hits us?
the investment environment of really, I guess it's the post-internet investment environment and the post-2008 investment environment has been extraordinary across tech businesses. And I think the impact on space has been a little bit differential because that space has become like a tech business in that you have the opportunity for smaller startups, individual founders to really have an impact. So I don't know that the low interest rates and the generally favorable investment environment, the availability of capital, seeking a home with higher returns, has affected space from a financial point of view in an extraordinary way. I think it's that space ventures are now participating in that activity in a way that they weren't before because of changing technology.
Speaking of individual founders, you look at people like Musk and Branson and Bezos. I guess they're coming up with something like this billionaire effect or something. All of a sudden, it's becoming stylish or important to invest in all these different types of space ventures. Do you see that effect as well?
Well, that's a great question. And we asked that question in 2015 as we were doing our first study on startup space. And we wondered, is this surge of investment interest driven solely by the sense that a kind of a drag-along effect from billionaire investment? What's going on? And we interviewed venture capital firms and different investors, and the answer is that the activity of somebody like Jeff Bezos or Elon Musk in space, the investment in a startup space venture, certainly does legitimize a space venture in terms of deal flow. That is, you might have a better chance of getting in the door to make your pitch, or at least, in 2015, 2016, 2017, that would have helped. But still, venture capital firms are not investing out of a love for space. They're investing out of a desire to generate returns. So really the concept, the business venture has got to stand on its own. More recently, what's happened is there's been so much activity that space has become a kind of a topic for the mainstream financial media. As you mentioned, I've been doing this for a long time. And 15 years ago, Space News might have been happy to talk to me, but probably The Economist wasn't calling me. And now, on a weekly basis, you're seeing articles in the New York Times, the Washington Post, and The Economist, and Bloomberg has done documentaries, and the Financial Times has done documentaries. And I just talked to PBS, who's doing a documentary on commercial space. So I think that certainly the billionaire involvement shines a light of publicity and brings attention to the topic, but the underlying business model has really got to be the driver.
Carissa, thousands of people from all over the world have listened to this podcast. Go to Google and type in Constellations Podcast to get to our show notes page. Here, you can get transcripts for all 100 plus interviews. Also, you can sign up for free email notifications for future episodes. Chris, I want to go back to your report we started the interview talking about. It looks like it covers 4 key segments of the satellite industry: manufacturing, launch, services, and the ground. Now, are each one of these categories changing equally or one more than the other? How do they all compare?
Well, they're certainly all changing very dramatically, and none are changing, if you'll pardon the expression, in a vacuum. They all changes in each segment.
It's a little space humor there, huh? A little space humor there.
Yeah, I was just gonna move quickly by that. They affect one another. So the changes with regard to satellite manufacturing, particularly those 2 trends that I mentioned for large geo satellites, the introduction and successful deployment of high throughput satellites, and then the introduction and successful deployment of small satellites, say under 600 kilograms is the definition we tend to use. Also the emergence of satellite servicing, commercial satellite servicing, demonstrated with Northrop Grumman's MEV in the last couple of years, has an impact on the shape of the industry. So certainly satellite manufacturing, those capabilities enable expansion of satellite services, new types of remote sensing modalities. The four, and now five, China has said that it is going to deploy a very large telecom constellation. Those very large low Earth orbit constellations of small satellites that seek to provide competitive broadband to end users. Those are enabled by those by the manufacturing capabilities, but of course must be viable businesses or envisioned as viable businesses in order to become a meaningful part of the services segment of the market. And we're in a very interesting stage where there's a huge amount of investment, a significant amount of hardware success, and we're poised now on the cusp of, are we going to see business case success, and what's that going to look like, and how is that going to play out? Are we going to have multiple systems? Are we going to have one system that triumphs? Are we going to see systems deployed but then not be able to generate sufficient revenue and get acquired? So some investors lose money, but we still have a capability. This whole shootout on the services side is really fascinating right now. Launch enables everything, and ground segment is really what, it often, when you're talking about space assets and capabilities, gets a bit overlooked. But as you know very well, there is zero revenue from the digital space economy without an effective ground segment, whether that is delivery to the end user or the support and infrastructure or operations that enable satellites to operate and perform, deliver the services that they seek to deliver.
One of the key segments you mentioned was launch, and pretty hot topic of late, given the exploits of Branson and Bezos. At a recent conference, you stated that launch is not a barrier to big satellite companies. Don't reduced launch costs have a positive effect for all satellite companies?
So this is such an interesting topic. And there are so many different business structures, and launch costs have different impacts in those business structures. So let's take the most obvious place where launch price makes a huge difference to the size of the market, where the market is incredibly responsive to launch price. And that is space tourism, commercial human spaceflight, whether that is suborbital or orbital. If I'm looking at a trip to space of like Inspiration 4, or a trip to the International Space Station, like the Axiom 1 mission, or to visit space but not orbit and touch space and come back, like the recent suborbital flights. Those the biggest cost component of that activity is the cost of launch by far, and the ability of people to afford and their willingness to pay for those leisure activities. And certainly there are science and research and business activities, but let's kind of talk about that. Most responsive to price case of leisure space flight, enormously responsive to launch costs. The difference in the number of people that can afford a $50 million flight versus a $10 million flight versus a $250,000 flight versus a, we hope, $50,000 suborbital flight in the future. There's a dramatic slope on that curve. So now let me go to the other end of the spectrum, where launch cost is really not a big driver in answering the questions, can this business succeed? What is the financial, can we close the business case? Is this worth doing? And that is certain kinds of large satellite ventures where absolutely you'd be delighted to save, 10 or 20 or $30 million per launch. But the venture is so large, the financial top line and bottom line of the venture is so big that, and it's really driven by satellite revenues associated with satellite services and the cost of, say, programming, if it's providing television services, that launch cost is not a driver in the business case. It's just a small piece of a 15-year business case that is really driven by the cost of content and the cost of customer acquisition and the revenue from those customers. So those are kind of the extreme cases. And of course, lower costs generally are better rather than worse but they don't necessarily make an enormous difference. So the small sat ventures that we're seeing deployed, particularly these massive constellations, takes a lot of launches to get multiple thousands of satellites in space. Nevertheless, I would argue that the more significant element of those businesses with regard to launch is the predictable availability of launch rather than a lower price. That said, there's lower price and there's lower price. We've seen a drop in price that's maybe 30% on average. Maybe that's significant. That's certainly, in terms of the satellite launch pie, means that the lower price provider is going to get a bigger piece of that pie. It's not necessarily going to dramatically grow the pie. If we see launch prices drop to 1/10 of what they are, then that may, change the economics of certain businesses and make that pie get bigger. But you really got to think about how much of the business cost is the launch component, really.
When you start thinking about launch, I guess it leads naturally to a discussion of bus, taxi, rideshare, Uber, Lyft. I mean, everything's changing here, isn't it?
The emergence of these large constellations of small sats has kind of concomitantly seen many dozens, I think well over 100 concepts for much smaller launch vehicles. And the benefit of a much smaller launch vehicle is that to do a launch, to conduct a launch, instead of paying $50 to $100 million or more for a large complex satellite, you might pay $10 million. So that seems like a dramatic savings. And if you've got to go to a specific place at a specific time, you need to control that launch vehicle, and you only need a small payload, then that's very helpful for your business model, and so, or for your mission, for your mission dynamics. So if you're a government science agency, for example, and you've got a specific payload and a specific target and a very unique launch requirement, you are so much better off with a smaller launch vehicle than a larger launch vehicle because you're able to dramatically reduce your total cost. If you're launching a whole lot of satellites, you probably don't want to launch them one by one. So there, in terms of efficiency, just the process efficiency, if nothing else, you might prefer a large launch vehicle. And the cost per kilogram on a large launch vehicle is a good deal lower than on a small launch vehicle. You're exactly right with the bus taxi comparison. If you need to go to a particular place at a particular time, a bus is not going to serve your needs, no matter because in order to get it to go to the particular place at a particular time, you'd have to buy the whole bus. Cheaper to take a taxi. Whereas if you're predictably going, if the bus is predictably traveling to where you need to frequently get a lot of people or satellites, the bus is going to be by far cheaper and more efficient than the taxi. Imagine taking a school trip with kids in a bunch of taxis. That would be worse, not better.
Oh, there's a nightmare.
The economics of launch are very specific to the application of the payload.
If we step back from 20 or 30,000 feet and look at some of the advances in satellite manufacturing, talking about software-defined payloads, miniaturization, virtualization. So which of those three do you think will have the strongest or maybe the most sustainable impact on the industry?
That's an interesting question. And I'm gonna veer slightly off that and say that probably the most important trend with regard to the satellite industry is integration with terrestrial telecom systems. Satellites right now are another layer. As opposed to being truly dynamically integrated into terrestrial telecom. And so the ability to software-defined payloads, the ability to adapt satellites certainly are going to be important to that. Miniaturization largely reduces the cost of a deployment. And as launch costs go down, maybe that gets slightly less important. However, as small satellites become more significant, perhaps it's more important. Interestingly, small satellites are getting bigger. We're so accustomed to think about satellites getting smaller because we've seen the introduction of all these small satellites. But in point of fact, as you look at any particular small satellite constellation, as the architecture evolves, the mass of those satellites goes up, because sort of the basic dynamic of putting platforms in space is the more you can do on each platform, the better. I would say that, technologies driving toward telecommunications integration are really going to be the most important factor.
One aspect that we mentioned in your report was the ground segment. Let's talk about the ground segment here. Traditionally, and you've been around long enough to know that it was always called like the red-headed stepchild, that no one really wanted to talk about the ground segment. But I think this is changing now with the advent of software-defined satellite networks and virtualized ground systems. It's gaining some popularity, huh?
Absolutely. And the idea of ground segment as a service is really quite compelling, and maybe would not have been compelling 15, 20 years ago, when the majority of commercial satellite operators on the telecom side are large constellations with or national constellations operating their own satellites. But thinking about startups who want to focus on the space segment and might be delighted to outsource the ground segment piece, ranging from infrastructure all the way through to engagement with customers. Suddenly that's a market, that's a business area that really didn't exist. And we've also seen, of course, a dramatic change in the magnitude and I guess what I'll call organization of data market in the world, and the ability of a service provider to connect a satellite operator with those markets is also very interesting going forward.
Carissa, we've done over 100 interviews here on the Constellations podcast, and we've talked with people about debris management, about on-orbit servicing. We talk about 3D printing in space. Some of the new services referenced in your report. And as they become more and more mainstream, I guess they'll contribute to the industry's changing dynamics, won't they? Some of these new technologies.
Absolutely. And I think a really useful way to think of space activities, and it's funny, of course, that we talk about the space industry. It's like saying, let's talk about the ocean industry. Which could mean cruise ships or, oil rigs
or beach houses, anything.
Surfing competitions. Exactly. And in many respects, space is like that. It is an enormously diverse business and operational arena. So we've talked a lot about the satellite value chain. The other segment that I think it's quite useful to think about is in-space activities, which can include human spaceflight, planetary exploration, on-orbit R&D and manufacturing, even colonies and mining in the far future. Those kinds of applications, maybe we'll call them the non-digital space activities. There's increasing commercial interest, there's increasing investment, there's increasing capability, both commercial and government. The markets, however, are very early stage. They're not particularly mature, and the end payer for most of those things at the moment tends to be the government. Not entirely, but very significantly, certainly for exploration activities, certainly for most human spaceflight, and for a lot of on-orbit R&D and manufacturing. While companies may conduct an experiment on the International Space Station and pay for that at some level, they're getting access to the space station. They may be getting launch on a lower cost or minimal cost or no cost basis, because of course the space station is a national laboratory. So we're at a much earlier stage in the commercial evolution of those businesses. And it's been interesting that the investment surge and interest on the satellite side has now created investors that are more sophisticated about space, interested in, the space economy broadly, and are starting to look for future growth opportunities in those in-space activity segments of the future market.
Well, Carissa, I would be remiss if I didn't bring up the elephant in the room here. In the last couple of years, everyone's talking about COVID. So what satellite sectors have been affected by COVID?
We looked at COVID impacts in the State of the Satellite Industry report, and generally speaking, there's a big chunk of satellite telecom services focused on airplanes. As the frequent flyers listening will know, it's gotten a lot easier to be connected while you're on an airplane. Some people think that's good, some people think that's bad, but the reality is you're connected, and that's largely through satellites. On maritime applications, cruise ships, as well as industrial maritime. So certainly those segments where the underlying customer segment was dramatically affected. So essentially no cruise ships, significantly reduced flight rates and numbers of passengers. Those underlying customer industries affected satellite operators. Also, satellite, there are adjacencies. There are certainly large aerospace and defense firms that build launch vehicles, build satellites, and also build aircraft, Boeing and Airbus, notably, that were affected on the aircraft side. And overall, that had, that created stresses for those companies across the board. So, maybe there's less discretionary investment funding available. Maybe there's a little bit less risk tolerance for certain kinds of projects. Generally speaking, the COVID impact was not a, across the board devastating double-digit drop. It was focused on those particular operator applications, and we saw a point or two in terms of total numbers. Not that's not trivial for a business, and sub businesses were hit harder. But from a sector standpoint, the impact was uncomfortable, but in no way devastating.
Well, Chris, it's crystal ball time now. You've been tracking this industry for a long time. And I just want to find out from you, when you look into the future, what excites you and then what concerns you the most? On
the satellite ecosystem side, I mentioned it earlier, integration, the idea of a more fully integrated satellite telecommunications operations. And we've seen integration of mapping and imagery with everyday life. We certainly see the integration of weather data with everyday life. So integration of satellite telecom services and the ability to switch dynamically from a terrestrial provider to a satellite provider and seamlessly, that's the most interesting to me in terms of the fully realizing the potential of satellite capabilities. With regard to in-space activities, there's so many fascinating things, but I will confess that I am just delighted by the idea of increased commercial human spaceflight, and I hope to see dramatic success and dropping prices and more people experiencing that extraordinary moment of seeing the Earth from space. I think that's a very exciting thing to look forward to for all of us.
Boy, she was motivating a lot of people. Chris, a lot of our listeners are going to get a meaning from this interview because of your ability to take a jargon-filled topic like finance and put it into understandable terminology. So we really appreciate your time today. I'd like to thank our guest, Carissa Christensen, CEO of Bryce Tech.
Thank you so much for having me on. This was an absolute pleasure.
Thanks for listening to Constellations, the podcast from Kratos. If you like this interview, please subscribe, tell a friend, and give us a review.